This is John Prasinos, Editorial Director of Investing Daily, with a video presentation for Monday, February 8, 2021. U.S. stocks racked up their best weekly gain since November, with the three major indices closing at new all-time highs. Hope for fiscal stimulus and widening vaccine distribution continue to justify bullish sentiment. As I'll explain in a minute, conditions are favorable, very favorable indeed, for commodities. Key sectors such as housing and manufacturing are performing strongly, while stimulus should encourage consumer spending. Optimism over the economy helped push crude oil prices to their highest levels in more than a year, for a nearly 10% gain for the week. The Biden stock market boom lives on. Take a look at the following table. The employment situation has been trending in the right direction, but jobs growth remains fragile. Private payrolls rose by 174,000 jobs in January, far exceeding estimates, the ADP National Employment Report showed Wednesday. However, the government's Friday jobs report disappointed, with the U.S. economy adding only 49,000 jobs last month, according to the Bureau of Labor Statistics. The number fell far below the 105,000 expected. The unemployment rate dipped by 0.4 percentage point to 6.3% in January, a welcome but only slight improvement. See the next chart. But, in a positive sign, initial jobless claims, a timelier gauge of labor market trends, fell for the third consecutive week. Through it all, mineral production is weathering the pandemic. In a report released February 2, the U.S. Geological Survey, USGS, showed that U.S. mines produced $82.3 billion worth of minerals in 2020, a reduction on the $83.7 billion extracted the year before. However, in the context of the sharp economic downturn caused by the coronavirus pandemic, the 2020 mining level is actually encouraging and bodes well for 2021 when the recovery is expected to pick up steam. Domestic production of, quote, rare earth mineral concentrates jumped by 10,000 metric tons in 2020 to 38,000 metric tons, making the U.S. the largest producer of rare earth mineral concentrates outside of China for the second year in a row. Take a look at the third chart. During the Sino-American trade war under the Trump administration, China threatened to curtail its exports of rare earth minerals that are vital for products in key industries, such as aerospace, high-technology automobiles, and energy. America's national security depends on rare earth metals, and China's moves spooked corporate and political leaders. But, under Biden, the destructive tit-for-tat trade war will likely abate. Regardless, China's threat increasingly rings hollow when it comes to rare earth minerals. As the latest numbers show, America is no longer overly reliant on China for rare earth minerals. According to the USGS report, industrial mineral production in 2020 totaled $54.6 billion, of which $27 billion was construction aggregates production such as sand, gravel, and crushed stone. President Biden's $1.9 trillion fiscal stimulus package is likely to become law, which would give a shot in the arm to the recovery and the construction industry. Biden also promises massive expenditures on infrastructure. It all adds up to a coming boom in commodities. It makes sense for investors right now to increase exposure to commodities. The world will soon be clamoring for vital raw materials such as copper, zinc, lithium, and rare earth minerals. When economic growth accelerates in 2021, these commodities should soar in price. In particular, make sure your portfolio contains gold. The persistent pandemic has propelled the price of gold in recent months. Gold probably has much further to run, especially as inflation rears its head this year, as expected. Well, that's it for now. If you have any questions or feedback for me, just shoot an email to mailbag@investingdaily.com. Thanks for watching.